Welcome to XM.com. I'm Cristina Marujos, and you're watching today's Daily Market Comment by Rafi Boyadjian. The euro is sinking, stretching its week-long slide and breaching the $113 level for the first time since July 2020, as investors turn more bearish on the eurozone outlook. The single currency had already come under heavy selling pressure from last week's big jump in U.S. inflation, but European Central Bank Chief Christine Lagarde triggered a fresh wave of selling on Monday. Although money markets once again dismissed her dovish remarks, currency traders are having a rethink. Recent economic pointers have generally been much stronger for the United States than for the Eurozone, with inflation also surging at a more alarming rate across the pond than in the euro area. More worryingly, this comparative underperformance comes even after fresh restrictions have started to kick in across Europe to fight rising COVID infection levels. But there are other headwinds that are causing angst among investors. Natural gas futures in Europe are soaring again, and with oil prices also elevated and winter approaching, Europe's energy crunch could get much worse. The euro was last trading around $113.15 and slumped to fresh multi-month lows against the pound and Swiss franc. Consumer prices in the United Kingdom rose at an annual rate of 4.2% in October, likely unsettling some policymakers at the Bank of England. The stronger-than-expected figures come just a day after the robust employment data, which cleared a major hurdle for the Bank of England to raise rates. Furthermore, Bank of England Governor Andrew Bailey reiterated his unease about inflation this week, opening the door to possible action as early as the next meeting in December. The pound edged higher today, retracing some of yesterday's pullback to climb to around $134.30. The US dollar scaled fresh 16-month highs against the basket of currencies on Wednesday, surpassing the 96 level, emboldened by yesterday's impressive retail sales readings, which reinforced the view that U.S. growth is gaining momentum in the fourth quarter. In other currencies, the Aussie slipped further, hitting one-month lows versus the greenback after underwhelming domestic wage growth data. The Canadian dollar was struggling too ahead of CPI data due later today that is expected to show Canada's inflation rate approaching 5%. The Loonie may not enjoy much of a boost if the CPI numbers beat expectations after the Bank of Canada's Deputy Governor dampened expectations of a rate hike in the first half of 2022. This was the Daily Market Comment. Thank you for watching at XM.com.